All right, my second recommendation is certainly QQQ. So QQQ is the NASDAQ 100 uh, stock index. So this is heavily associated with the technology and the growth stocks, as NASDAQ is. And this is the cream of all the stocks when the growth is the king. And now that interest rate is going higher, so this is getting sold off. You can see that the acceleration at which this QQQ got sold off from November 21 till today. So it went down. If I look at the size of this decline, so from 403 all the way to today, which is 268, so about 33%, right? Well, NASDAQ was down about 25%. So is there further down in the horizon, or is it the end of it, right? That's the question. I don't think it's the end of it. I think the maximum damage has been done. So if you look at the QQQ composition, so the Apple, the Google, the Amazon, the Tesla, the the Netflix, the Meta, if you point to any of these stocks and if you ask the question, are those good buys now? The answer is most likely yes. But people are hesitant to buy because they don't know what the bottom is. But if somebody told them that the stock has not bottomed yet, but the technology stock most likely will rebound as we see the next earning, and you'll not get the opportunity to buy these stocks in the next few years or so, then people probably will be interested. And I'm saying exactly that the earning estimates are really pessimistic. There is a headwind of dollar.
I found this on the web.
Dollar is at 114, 113. That is really still a headwind, and that's the only strong headwind at this point for the technology stock going into the earnings. But if the most of the technology stocks, for example, can offset the high dollar index with their margin, given that inflation has inherently come down in the last few months, then most likely we will see that the earning actually has declined. But for many stocks, it is still okay. And I would think that someone like Apple, someone like Google, someone like Facebook and Netflix, and the high growth stocks, given that the expectation is so low, if the earning kind of holds up or the guidance is not worse than what Street thinks, or at least in the lowest range of the current Street estimate, then for all these stocks together, people will start to look elsewhere rather than QQQ to sell off. The exact thing happened on Facebook. If you look at last week, on Tuesday we had this news. Was it Tuesday or Wednesday? Wednesday we had this news, I believe, that the Apple was holding his guard at 150 level. But turns out that Apple is, there some news came up that iPhone overall number of, the estimated shipment will be hit by this inflation and by this economy across the board. So I know finally the Apple stock went down. But Meta, which already went down quite a bit at 136, I'm not saying it's not going to go down further, but this week was really crazy for the QQQ for most stocks, right? It went all the way from 290 around, or close earlier last week, all the way to 270, 269 today. So around 20 points down for a strong index. It's crazy. So it's 10% down almost, right? In the matter of, or 8% down in the matter of 7-8 days, 7-8 sessions. So what does it tell you? But the point is that even it went down so far, given that Apple went down quite a bit, Google went down quite a bit, Amazon a little bit, but not so much. But Meta, which formed a bottom, like it was at 136 last week. But if you look at this week, it also closed around 136. So it did not go down that much because people already have started thinking that, yeah, this stock is totally beaten down, and people are not selling that much. There's not many sellers of Meta anymore because people are thinking that it's a good price to hold or buy. So the buyers sellers equilibrium, the that supply demand equilibrium is being restored in Meta. I think it might go down a little bit, but not more than market. So far, it has been underperforming market S&P, and so the point is, same thing can happen in the QQQ. QQQ has been underperforming S&P for a long time. If I draw a chart here, if I just add on the QQQ and compare that with SPX, you'll see. Let me just give it a second so it shows up. So now if I draw this relative performance of these two, you'll see that S&P, this is the orange line, from its high has gone down. Let's measure it. About 26%, whereas QQQ from its high has gone down. If I go back to this level of 66, it gone down to 33%, right? About 34.38% or 35%. So this is crazy. So around 10% underperformance versus S&P. Obviously, S&P, QQQ was sold hard because of this growth story. It's priced in, and 25% bottom, down on the SPX is also significant. I'm not saying that in the next 1 month or so is going to, S&P is going to catch up and go to 33%. At the same time, it's very unlikely that QQQ will further go down, accelerate from 33% to 40%. It's probably going to consolidate around here, right? It's already formed a head and shoulder pattern. If you look at like this chart, starting from this 2020 COVID low, so it's actually came from here. It's formed this, if you can call this the left shoulder. There's a head formation and there's a right shoulder. So it's a head and shoulder pattern. And if you look at the neckline, so that's the neckline. So that's around here. So if I remove this chart, S&P chart, say this, then this neckline is formed right around here, which is around 253. So the way to play it, I'm saying that it will probably take a while to go to 253 level, and it is probably going to consolidate around this region for the next few weeks, right? If you look at the vertical fall of the QQQ in the last, from 15 September till this week, it actually fell. If I try to measure it in this zone here, it fell 13%. After it fell almost from that 406. So let's measure it again. So from there all the way to September 15, it already around 25%. It went down, and then another 10-15% in the last 15 days. There has to be a bottom of this process, and my hunch is that it is forming the bottom between this 270 level to 250 level. Why 250 level? There is a reason for it. Let's go back to the weekly chart and try to find where the resistance and supports are. So if you look at the COVIDs, which is our previous low, so now it's kind of like poetic, right? That we went all the way down in the COVID, and we are sort of a natural phenomenon, if you will, and then with all our money, the federal government printed this money, issued the bonds, and borrowed around $8 trillion and gave it to the economy. Now that economy that got a boost, which was supposed to be down much further due to the COVID, it got a boost from the artificial money, and that created this, the inflation. and now we are paying this price of the inflation and catching up with the low. Right, so it's kind of like poetic, I guess, that to visit this low, and but at the same time, as we are the humankind, we we fought that, this 2 years of COVID, not in an uncertain way, in a way that is really, really, really impressive. So that has a prize and that has a reward, and I think that's the reason why it's also poetic not to go all the way to 170 low. Let's give an example of the QQQ and or the 2000 for the S&P. We made progress during these 2 years in productivity, in the connecting with the family more often, in still getting the work done remotely, and all the different things that happen in spite of we deferred this, the inevitable recession and the long-term downfall of the economy by artificially printing money, which is not right way for the economy. All in all, the balance act of where we should be somewhere between this 166 and 407, right? So that's about roughly 250 points. Let's call it 50% retracement. So from here to all the way, if I draw a Fibonacci, retracement, the 50% is right around, if I expand this a little bit, 286. Right now we're around 270. So I think we are oversold, and 286 sounds like the right price for QQQ. Now we still have some headwinds. Obviously, in hindsight, everything looks natural, looks like makes sense. But while we're in the middle of it, it doesn't look like what things will end. So that's why we can get some references from these Fibonacci numbers and others. So now, if we look at the middle level is 286, and if you look at the 0.61 level, which is a strong support as well. On the other hand, 312 would be strong resistance. It's 256. So good strategy would be to sell 250 put for QQQ given this bound and the rebound. So 250 put, if you sell, you'll get about around $2 for October 14th. Why October 14th? Because October 13th is your CPI. So there should be some volatility before the CPI or after the CPI, depending on which way the market is headed in the next couple of weeks before the CPI. And QQQ will be impacted one way or another. So it is not going to be the bottom at 267. I'm pretty certain that it's going to be headed along with the Apple. If Apple goes down to 129 in the next couple of weeks, as it broke that 150 strong support to 138, which is, by the way, is also very strong support for Apple. If it goes up towards the 150, then QQQ will be headed towards this 280, this 280 zone, 284, and probably hit a resistance. And if then QQQ will go down further towards this 260 level if Apple goes down towards 129, which is this 252 weeks low. Either way, I think 250 is a solid buy at the time, and and most likely within a year, within probably by next quarter, if not a year, it'll go back to probably towards this 312 or maybe 347 level. But at least I would expect that by end of year we should be beating this 284 level. Could be 290 in next 3 to 4 weeks by the end of the earning season in November, when most of the tech earnings should be done. So sell a put, aggressive put, buy more, as many as you can, or sell as many put as you can at 256. You can also sell call around 290 to 295 to 300, where there's a strong resistance for QQQ, and have an expiry by October 14. If you get assigned, I would say that keep it or sell call against it at 275. But I would expect that if it goes to 250, is going to be like, Apple, and that means Apple and Google and, FANG stocks, and also the Nvidia and all, the SoC stocks, the chip stocks, all have bottomed. They have gone so far that it's too attractive for any of the investors to ignore anymore. So that means that everybody will pile on. That means there's a sharp rebound, and you'll miss it. That's why I'd probably go miss the bottom. So, but nevertheless, you'll probably get a chance again if it goes to 250 level. It'll rebound to probably around 270, 275 level, so you can buy that again. But one way to kind of go, and it can bounce back from here to 290 again next week. So right now, if you're on Monday, you sell a put at 250 aggressively, or you can go 255 or 260 as well. Have an income around 500, 600 for every put sold. That would be a good strategy. Then you can even, get assigned, and then for 100 QQQ and make money up to around, $20 in next 1 month for every stock, or for 100 stock, $2,000, or I would say by 1 quarter, your probably upside is $50 per stock, so which is around $5,000 for about $25,000 you spend on this, by selling the put, getting assigned at 250. So for $25,000 spend, you get around $50,000, $5,000 in about 1 quarter. Not bad. That gives you close to 20% return, right? So this is a good trade. I think QQQ and the other one, Adobe, are my strong trades for this week going into the earnings season. Okay, thank you.